is Elena with First Day Realty, and I'm here interviewing a good friend of mine, Chris Chanakos. He's a mortgage expert with Mortgage Pal, and he's here to share with us a little bit about his business and also some insights, crucial insights for people who are thinking to buy or refinance. Hi, Chris.
Hi, how you doing, Elena?
Hey, so I just wanted to quickly introduce your business.
Okay.
You're obviously, I know Chris from way back. Our kids go to the same school, so we've kept in touch over a number of years, and he's done a great job for my clients. In case you're wondering, his office is located at Suite 229 at 5589 Burn Road in Burnaby. But Chris works and lives in the Cambie Street area, right around the neighborhood of our school. And best way to reach him is basically go on his website, Christopher Chanakos Mortgage.ca, or email him, Chris at ChristopherChanakosMortgage.ca, or give him a call on his phone, 604-657-4664. So, Chris, why don't we take a few moments and you can tell me about how long you've been in the business and what got you started?
Okay, I've been in the business for approximately 4 years. And previously, I'd been in the education field for 15 years. And I wanted to educate myself in the finance realm. And I thought it's a perfect opportunity for me to help other people with their financial needs, whether they're purchasing rental properties, vacation homes, or their first home. This career has given me that opportunity. And the other reason was, as a family man with 2 young children, it gives me the opportunity to have a work-life balance. I can take them to school, pick them up, and I can work till midnight if I want. And that's been something that's been great.
Great.
Yeah.
Great. Yeah, I have to find that. Yeah, definitely. That's also one of the reasons why I got into real estate, learning more about real estate investment and also having a more flexible schedule to take care of my 2 kids.
Yeah, and
So,
a lot of times the best way to learn is to help other people.
exactly. And to also do it yourself. Yeah.
Yeah.
I definitely agree. So what do you find, I invited you because obviously you have a lot of background knowledge. What do you find is one of like common misunderstandings or questions that you encounter with your clients when you first start working with them?
I would say one of the biggest things is rates. And what I mean by that is we all drive to work and we hear about rates on the radio or we see something flash up on our computer and we think we're going to get that rate. And that's often not the case because rates are tiered, whether it's insurable, insured, or uninsurable.
Yeah.
And then your loan to value affects that as well. So I always tell people when we're going through the process, I've had them pre-approved for a rate or approved, and they see a rate, call me. And I'll explain to you why that rate is there and why it's not.
It's basically like clickbait. It's like clickbait, right? Like
it's called a bait and switch. They tell you you're going to get a rate, you get in, and then they tell you why you can't. But you've invested the time, so
to sit down with them and talk.
And sometimes you can get that rate. And, yeah. So
it's kind of like a free donut at McDonald's, right? Like they get you in. Or free coffee, right? They get you in the door and then you end up buying like the coffee or you end up buying the donut, right?
Yeah. Anybody that spends time on YouTube knows what clickbait is. So.
Yeah, exactly. So the rates, like you said, the banks advertise those extra low rates on purpose to get people in the door, basically. But the actual rate that people are going to get depends on a wide variety of factors, like you said.
Yeah, and it's always an insurable rate that they show. It's an insured rate, so you pay a premium, you get the best rate. As we know in Vancouver, if your property is valued at $1 million or more, it's uninsurable. So,
and explain the difference. What do you mean by insured versus uninsured?
So an insured mortgage is when the property is worth under $1 million. It's not a rental, and you put down less than 20%.
Okay.
You're going to get the best rate, but you're going to pay a premium, which goes on to the mortgage balance.
Right. Yeah, and that premium usually varies between.
The average I see is, $12,000 to $17,000.
Okay, so that's not too bad.
Yeah, depends on your property. Depends on how much you. So if you put down 15%, your insurance is less than if you put down 5%.
But then, of course,
there's a lot of variables.
Yeah. But then, of course, there's also the balance of the mortgage that you're trying to insure. And like you
Exactly.
said, it best works for properties that are priced under a million. And
Yes.
then the mortgages that are over a million. The price, what do you mean is like, is it the mortgage that has to be under a million or the
Property
property
value,
value? Okay, property
which
value.
makes it
Gotcha.
difficult in the Lower Mainland,
For sure.
right?
In an expensive city like Vancouver, yeah, I
Yeah.
mean, on the west side, you'd be hard pressed to find a house under a million.
Oh
I
yeah.
mean, condo, yes, but
Yeah.
house is a little tougher.
Yeah.
So,
So rates is
expensive.
always a huge
Mm,
discussion,
yeah,
and I try to let people know this
yeah,
is the tier you're in, and this is what we're looking at. And
yeah.
sometimes it makes more sense to put down less than 20%, get an insured mortgage, than it is to put down, because 20% down
Mhm.
on a property under $1 million is going
Yeah.
to be your worst rate,
Yeah.
basically.
What do you find though that oftentimes when I start working with first-time buyers. Now, most of the first-time buyers that I'm working with right now, they are trying to put more than 20% on the property because they're trying to get that 30-year amortization, which makes the monthly payments a little bit more affordable. Um, what's your advice to these people? What's more worthwhile to do? To put the extra down payment and make sure that you are in the longer amortization, or is that going to be able to get them? Because with a lot of people, they're really like, especially when you're first trying to get into the market, you're really like pushing yourself, right, to just get in the
Yeah.
door. So, what's more worthwhile for people like this?
Well, I think everybody's financial situation is different.
Hmm.
Some people want to put down less so that they have some backup for a rainy day. Some people want to put down more because they grew up with parents who the first thing you did was pay off your mortgage.
Yeah.
And we've learned now that that's not always the best thing to do.
Hmm.
It, invest some of that money, get a second property. There's many things you can do with that money.
Yeah.
So everybody's different. And that's why every mortgage is an individual conversation. And we need to know what people's goals are,
Hmm.
what their resources are, what their
Yeah.
future plans are. All these things come into play. And
Right.
then I do the math and I say, if you insure it, this is what's going to happen in 5 years. If you don't insure it, depending what you put down. So there's lots of scenarios, there's lots of math, and that's what we do to help people make a decision.
Right. And what I appreciate the fact is that your consultations are always free, no obligation,
Yeah.
and they are always confidential. I think that's another great thing.
Yeah.
So you don't have to feel worried that any of this information will just be out there. Same as with realtors too. We have
Yeah.
a duty of confidentiality to our clients.
Yeah.
So another question that I wanted to ask you, Chris, is do you work with any one specific lender, or do you work with a variety of lenders? And what's the advantage of that?
So the advantage is we do work with multiple lenders. We work with a couple of the big five banks, and we also
Mhm,
work with a myriad of mono lenders. A
mhm,
mono lender is just like the big bank,
mhm.
except they are not a deposit taking bank. You can't have a credit card with them, a savings account. They only do mortgages. The mortgages are backed the same way the big bank mortgages are backed, but they offer a lot of unique products. There's discounted rate products, there's products for business for self, student loan, physicians,
Mhm.
new to Canada. So we have so many lenders we can go to, look for rates, look for product, look for, might be your prepayment. You're looking for a good prepayment, and everybody has an advantage. And sometimes the big banks are where we go, and sometimes we use the mono lenders.
Right. And I think that that's a huge time savings for anyone who starts working with you, because you're basically can bring them up to speed and let them know what would work best in their scenario, right?
Yes. And I think anybody, including myself, who's got a mortgage at a big bank, knows that it's not always easy to get in and see your mortgage advisor.
Hmm.
And I'm open 24/7, 365.
Hmm.
A lot of my clients I deal with at night because they have children as well. And until they get them down, that's when we do business. And it's very beneficial.
Right. Yeah, it works for both.
Mhm.
So, what's the best way to get started? Um,
So when a client calls me and they tell me that we're just browsing, we're looking around, we're interested, I always encourage them to start the process. I'm going to
mhm,
send you an application for a credit. check.
Mhm.
We're going to collect some basic documents, and I'm going to need a lot of personal information
Yes.
so that I can build their file. And that way, in a week,
Yeah.
when they call me and say, "Oh, well, we put an offer in," we're
Yeah.
already there, and we can submit it for approval.
Right.
So
you've
a
done
lot
all
of
the
people,
groundwork.
yeah, exactly, because otherwise people like to wait because they don't think they're looking, and then they find that property,
Yeah.
and we have a week for subject removal.
Yeah. And do you explain also the difference between a pre-approval and a rate hold?
Yeah, so a pre-approval is nothing but a rate hold, to be honest.
Mm-hmm. Yeah.
There are very few lenders that actually do a pre-approval,
Yeah.
an actual pre-approval. The rate hold will generally be a little bit higher than their best rate because they usually hold for 120 days.
Yes.
And generally if I do a pre-approval for a lender that doesn't do an official pre-approval, I send a letter with what you qualify for
Mm-hmm.
based on the information I have.
Right.
So my number one rule for clients is, once I pre-approve you, the bank pre-approves you, or you found a property and you're approved, don't change anything.
Right.
Go
Don't change
loosen your
jobs.
car. Don't rack up your credit cards. Don't
Yeah.
change jobs. Yeah, you can be approved with a bank and have a commitment letter, and they can back out.
Right. Yeah, and that's something that you don't want to do once you've committed to a purchase, for sure.
No.
Right. So yeah, I wanted to really thank you, Chris, for taking the time to walk me through these basics, and I hope that our viewers also found this information very helpful. And I encourage everyone who has any questions about mortgages, whether you're thinking of buying or refinancing, or just exploring your options on whether you can save a little bit of money on your monthly payments, to reach out to Chris. Once again, you can call him or text him at all hours. I know he always answers the phone. Or he'll at least text you back,
It
right? If he
happens.
says, I'm in the middle of something, I'll get back to you quickly. Yeah, it's a great way. He's a great guy. You can always reach him at 604-657-4664 or email him at chris@christopherchanakosmortgage.ca. He also has a website, ChristopherChanakosMortgage.ca, of course, and you can follow him on Twitter at Chris Chanakos. So, and yeah, of course, if you are wondering about your options in this real estate market, you can get a hold of me at 604-655-9412, or shoot me an email at elenarealtor.ca, or of course, find all of my contact information on my website, elenarealtor.ca. So thank you so much, Chris, and have a wonderful day.
Thank you, Elena. You too. Go enjoy the sunshine.
All right.